Hey everyone, this is Keith from easytradingschool.com, and today in this video I'm going to be talking about what is a price action analysis and what you can do, and hopefully in this video I will talk about when you can use it. So let's get started. So a price action analysis is actually an analysis of the price movement from a chart about a market over time. So it's something not that you look at a chart and you can identify it straight away. You cannot do that. You have to look at the overall longer period of time to identify that trend. And by learning to read this price action market analysis, you can start to identify recurring practice. And let me just open this one. Yeah, so over time you can identify the recurring pattern of the price action and changes in the market's sentiments. So in simpler terms, price action analysis uses a natural or raw price movement of the market to analyze, and you can use it to trade on it. This means you are making all of your trading decisions based only and only on the price indicator chart without looking at any news. This kind of trading is called naked trading because you don't know what news is affecting the prices. You are using just a chart, and is the most easiest method you can use without having to go and look at economic calendar and news. Now the economic news is very important part of the trading, and it takes a lot of time, and it's a very slow process, because when the news comes out it may not affect the longer picture of the price very quickly. It takes some time. It could be a day, it could be a week. So all the economic variables, they create a price movement, and which you can see in the chart, and you can see that in the chart right now. When I zoom in this one, all the news that's happening now, it's making change to this price pair. I'm gonna change it to Euro USD, and it's one of my favorite currency pairs to trade with. So I've changed the currency chart to USD JPY. I can see the price movement here. So any small price movement such as this is just based on orders. Whenever somebody is buying or selling any currency pair, they do a counter effect into other currency exchange rate, and when there's a big news, then a lot of this exchange rate is happening, and a lot of people are either selling or buying one particular currency. And then when this happens, a very huge difference is created. So we can see over time how all of this has been created, and we can easily see in this price trend movement that the trend is now going upwards. The USD is getting stronger against the JPY. It was strong before, then it became weak, and now it's getting stronger again. It's only a cycle. It happens over and over again, and this is how the market moves. So whenever there's an economic variable such as this, and then for a human to analyze all this news is very difficult, and that's why a lot of the computers are used to make these trades by looking at the news. So there are computers out there, programs, and you can run them on your computer, and they look at the news and they make trading decisions. They're called auto trading robots. We have some of them which we have used before. If you watch my previous videos, I've used some of them. Because it's absolutely impossible for a human to sit and kind of analyze all the news and kind of think about all the effects and then come and trade. It's just too much work. Now this price action analysis makes things easier because you don't have to look at any news, because you look at a chart, you kind of zoom out and you look at a bigger history. So this is say a 1 day's chart. If I look at the 1 month chart, I can see the overall trend in the movement. And in Forex you can actually use this quite a very good way, because you don't have to you can only close a position when you want to. You don't have to set a stop loss if you don't want to. You can come back in a week's time and then make the sell off, and then you can only sell off an asset, a currency pair, when you want to. If it's making a loss, you don't have to sell it. So let me just give you an example. I am using I'm logged into IQ options, and I've got an asset here. I'm just doing some back testing here. I closed off this one in a profit. Now I can see that the position overall, that the Australian dollar is losing its strength against the USD, and now I can see it's going upwards. But what the price analysis strategy tells me, that the USD, the Australian dollar is becoming weaker, and that's why if I do a sell trade at this moment, this will be the best thing to do. And to set my variables here, my settings, I will do 1%, and I will do a sell at $500, and I did a sell trade, and I know it is going up. I know it's going up, but it's going to come down, because according to the price action analysis, the price of Australian dollar is going down. So this is where I've placed the trade, and I don't have to sell the trade. I know it's going upwards, but it will come down, and this one should close in profit. So let's go back to my next question: when you should use the price action analysis. So you can use the price action analysis in any market at any given time, in any kind of exchange, because you're only looking at the chart itself, so it's applicable in any conditions. However, because of the nature of this, my personal favorite is to use the price action analysis in Forex market, because the Forex market is very liquid. You can change your money very quickly, and there's also volatility, and then you can make use of, and you can use this strategy over and over again. There's no need to have 20 other strategies applying. You can use simply this strategy, because the Forex market moves in a very predictable fashion, and this way the trend is always followed in currency market. I can say that this trend is following here, and it is going to come down. How low it goes, I don't know, because right now this has been the lowest in, for example, if I do 30 days, yeah, definitely. So you can see that there is room for the Australian dollar to become weaker. It can go way down here, and if that happens, you're talking a very huge profit, because you can see it's like 49% here, and our profit target should be about 10%, if not 5%. So you will definitely make money when it's coming down. So I made a purchase of 500 US dollars, and here we have the position happening here. So let me just go in there, not auto close, but yeah, this is the auto close. So if I do close now, this is the trade, and I'm using the multiplier of 20, and I'm gonna leave this asset open until I see profitability, because what happens as soon as you hit buy and sell, you always start with negative. So the negative you see here is actually the spread which the broker uses to make their profit, because you're not gonna instantly make profit until there's a longer difference between the purchase price and your target price. Now let's look at this chart, and also there's a pin bar strategy which I've talked about previously in my videos. If I change this chart type to a candle chart by going here and this one, and then if I zoom into this, the size of the needle, the tail of each of the candle bar also determines which direction it's gonna go into. So the longer the tail, the better, and then it goes in the other direction, and that's what the pin bar strategy is. But the price action analysis is basically just looking at the trend, and it's quite easy to see that the Australian dollar is losing its strength against US dollars. So that's why I did a sell trade, and I just simply have to wait maybe a couple of hours, and it's gonna go down. Hopefully if it does go up, then it will come down, and I don't have to sell my currency until I turn into green. And you can use this example and you can trade with that. There are some brokers which you can sign up with. I've put down the links down in the description. If you have any questions, do email me at contact@easytradingschool.com. I also have a course which you can subscribe to, that's also on easytradingschool.com. Please subscribe the video, and see you again. Take care. Goodbye.
Thank you, Keith, for great free before and free after sign-up support. And thank you for watching. And to subscribe, click below and comment and like, but just don't touch.